Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. As we get started, let's do a quick systems check. If you would, just type OK in the chat box if you're hearing me clearly and seeing my screen all right. Okay, looks like we're up and running fine. If anyone has any issues as we go along, feel free to let me know. As always, keep in mind that each trade you take has risk of losses. You want to manage risk in a way that makes sense to you. And we have some nice tools in that regard that as we go through some trade examples, perhaps we'll go through the use of those tools as well that help you with your risk management. And also keep in mind that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Now, from our main website, we can log into the WebTrader platform, and that allows you to trade on your MT4 and MT5 accounts. The same functionalities and features we're about to use in the WebTrader, you also can find in our app, which also allows you to trade on MT4 and MT5 accounts from one location. And the app has the same look and feel as our WebTrader platform, and you can find it in the major app stores. So if we log in here in the upper right corner, we'll be in the WebTrader, and we've got a couple different places we can go within the WebTrader to use tools that can help you with your fundamental analysis. And along the way, there's help with your technical analysis as well. And you typically want to consider both of those together when deciding to make a trade and figuring out your entry points and exit points, etc. And so we'll kind of demonstrate that today. A good place to start would be the economic calendar. We have some nice announcements coming today and tomorrow that the historical records show some pretty decent predictability based on how the numbers have come in the past. And so we can analyze that on our economic calendar with the advanced tools that are offered on it. And that can help you make a decision as those numbers come in today as to what direction you might want to trade on different currency pairings. And so if we go to the discovery menu found here on the side toolbar, and then go down to the economic calendar. This could be a good place to start as you're planning your week. Even on the weekends, Saturday, Sunday, you can plan the upcoming week by analyzing the upcoming announcements to see which ones you might be interested in trading on. And so let's go to today on the calendar, and you can indicate which countries you want to look at the announcements from as well. And you can indicate whether you want low, medium, or high level announcements. Typically the medium and high level announcements I have activated because they tend to move the currency pairings more as the numbers come in compared to the low level announcements. So I kind of filter those ones out. Now, everything will be based on the time zone that you choose here. Okay, and then you'll find the real line live timeline is here. So as you get below that line, this is the future. These announcements have not happened yet. And above this red line, these announcements occurred earlier today. So let's take a look at maybe the next big announcement that's coming, and that's out of Great Britain. And it's the interest rate decision from the Bank of England. And so if we want to analyze how has this rate decision affected movements in the past, we can do that using these tools over here. And so first of all, we see that the prediction is there will be no rate change. If it comes in at 5.25 as expected, we can check what has happened in the past when the rate decision comes in as expected. Or if it comes in above or below expectation, what has happened in the past with different currency movements. And so rather than having to do that manually and get on the charts and find when were the last announcements and try and find the exact time on the chart and see which way did the movement go based on how the announcement came in, that would be difficult to do on your own. And so this tool here allows you to analyze that data with just a few clicks. So I can pick my currency pairing. I'll leave it on GBP USD. I can pick time frames after the announcements that I want to measure the movements. For now, let's leave it on 4 hours after the event. And then I can look at all of the events at once, which I don't see any advantage. 4 went up and 4 went down. Or I could qualify it. If it comes in above forecast, what happened? It only happened one time. Doesn't happen very often. If it comes in below forecast, what happened? Again, it only happened once. But if it comes in as expected, matching the forecast, which is usually what happens with rate decisions, we can see there's a lot of data points, and we can see that 2/3 of the time, that's 67% of the time, the movement went up, and 33% of the time, the movement went down in the 4 hours after the announcement. So had you traded on all of these, you could have won 67% of the time had you bought after the numbers came in. Okay, we see average range movement about 74 pips after 4 hours. And you might think, well, that's after seeing the numbers come in. Maybe the movement occurred in the first 5 minutes, and you don't have time to place your trade. And so we can check that. We could say, okay, after 4 hours, the average range movement was over 74 pips. In the first 5 minutes, the movement was only about 25 pips. So there were another 50 pips to go, approximately, of range movement after the first 5 minutes. So once the numbers come in, you have the benefit of hindsight to see, okay, this came in maybe, let's say, matching the forecast, and then okay, in the past, 2/3 of the time, 67% or so, the movement went up after 4 hours with a range movement of over 74 pips. And so if in the first 5 minutes you could catch a downward movement or a small upward movement like all of these, then you could see that after 4 hours, the movements 2/3 of the time finished significantly up. Okay, and so this is the sort of thing you can do before the announcement, analyze how has the result of the announcement caused movements in the past, and then have a trading plan in place. And for me, if it comes in above or below forecast, I don't have enough data points to determine what I should do. In general, I would think if the interest rate comes in higher than expected, the currency would probably strengthen. If it comes in lower than expected, the currency would probably weaken. But we don't have a lot of data points to use this tool to make that projection from the past data. But if it matches the forecast, we have a significant number of data points, and 4 out of 6 times you'd have been profitable to buy with the results coming in matching the forecast. Okay, you can get an idea of the distance that you might put your take profit and check it after 4 hours. We could even see after 1 hour what was happening. It was 50-50 after 1 hour. 3 were up and 3 were down. But after 4 hours, 4 were up and only 2 were down. Okay, so it looks like waiting a little bit longer paid off in this regard. And you can analyze those different time frames to get a plan for after how much time would you maybe want to close based on the momentum from the announcement. Okay, so very nice tool to get a lot of information in a short period of time. Now, we can see there's a number of announcements at once out of the US as well. So you can start to look and see, well, which announcement has the greater effect? Which one should I focus on if there are multiple announcements at the same time? And what you might notice is certain announcements, like the initial jobless claims, tend to have a larger effect on the movement than some of these others, like the housing starts or the building permits. And you can check that to see which one should I focus on if there's more than one at the same time. And so, 4 hours after the event, looking at the Euro USD with the US announcement, if this comes in above forecast, 2/3 of the time, the Euro goes up against the USD. The USD weakens. Why? Well, these are jobless claims. If they're higher than expected, well, that's bad news for the US. If there are higher initial jobless claims, meaning more people without a job, it makes sense that in the hours following that type of result, if they come in above forecast, that the USD would weaken and the Euro would climb against it the majority of the time. That's 2/3 of the time. Okay. And what if it came in below forecast? It's closer to 50-50. It's 60-40. And the movements that went up were really small. and the largest movement was a downward movement. So there's actually a leaning towards a strengthening USD if the jobless claims are lower than expected. Okay, but there's stronger momentum if this comes in above forecast. You can see it. Okay, 67% compared to 33% up. Okay, and only one went down significantly. Really, this one stayed flat. So it's like 4 went up, 1 didn't go up or down, and only 1 dropped. So you can see a clear statistical advantage to buy here if the data comes in above forecast. So sometimes you'll look at it and you'll say, okay, I'll only trade if it comes in a certain way, in this case above forecast, because the data seems stronger percentage-wise. Okay, and you can analyze, well, what was it like after 1 hour? Okay, still 67%, 4 up and 2 down. Okay, what was it like after 5 minutes? 83% up. Okay, but that's in the first 5 minutes and it's only 11 pips. By the time you get your trade off, even within the first 30 seconds, it might have already went 11 pips. So it's hard to catch that initial 5-minute movement. But you can look and see and understand that at least on average in the first 5 minutes, it didn't go past 12 pips. But after 4 hours, we're looking at a range movement of almost 40 pips. So you have time to get your trade off even after the numbers come in, is what that shows there, what that demonstrates. So that's another announcement that really could be useful, this jobless claims number. If we start to look at some of these other numbers, manufacturing data, we can see what kind of influence do these announcements have. And we can see if this is above forecast, it's 50-50. If it's below forecast, it's 60-40. None of that is convincing to me. So the reason for that is not that this data is not important. It's just that the jobless claims data is looked at even stronger. And so it's creating the directionality percentage-wise more of the time than the manufacturing data or the housing starts. Okay, and so that's how you would analyze each of these and see which one really is determining the direction more. And in this case, it looks like it's the jobless claims, and that's the one maybe you would focus on. We can also look at tomorrow maybe. I don't see any other high-level announcements today. So if we go to the calendar and switch to tomorrow, the inflation rate data out of Japan, I already checked it. It's listed as high level, but there's really not much movement from it in the past. So if I click on the tool, I can look 4 hours after the event. If it comes in above forecast, and it's almost 50-50 movement. 57 up, 43 down. If it's below forecast, exactly 50-50. 2 up, 2 down. One thing you'll notice is the downward movement was really small, and the upward movement was much larger. We're talking average range movement 50 pips, and the upward movements were between 30 and 50, and the downward movements were less than 5 pips, each of them. So it looks like there's a clear advantage, not percentage-wise, but pip-wise, to buy if this comes in below forecast. And if it comes in above forecast, there's just as much upward movement as downward movement. I would probably lay off this one. Okay, that's what the data is showing from the past. And so you can analyze each of these announcements, and you'll find that some have much stronger movement than others. And both of these are retail sales, but what we'll see out of these is I believe the year over year has a stronger effect than the month over month out of Great Britain. And so if we look at year over year movement on retail sales, 4 hours after the event, if it comes in above forecast, 2/3 of the time it goes up, 1/3 down, pretty significantly up. We're talking 44 pips range movement. If it's below forecast, it's 50-50. So I'd be looking, if I'm basing it on this announcement, that if it's below forecast, I'm not interested. If it's above forecast, I'll buy. Okay, because after 4 hours, we're looking at over 44 pips range movement. And in the first 5 minutes after the numbers come in, we're looking at only 10 or 11 pip range movement. So you have time to get that trade in before it goes from 10 pips to 40 pips or so. If you're looking to do the upward move with retail sales data coming in above forecast. And a couple times it reversed. Okay, But the majority of the time, 2/3, it climbed after 4 hours. So you start to analyze these, and maybe the month over month is better. Let's look. Maybe that's the one to key on. And so, because they're at the same time, if this comes in above forecast, 60/40, no, not impressive to me. If this comes in below forecast, 2/3, it's no stronger than the other data. So these are okay. I don't see the 75/25 or the 80/20 percent movement directionality wise from the past, but these maybe in the buy direction tend to lean upward when the numbers come in a certain way. But then we don't have to trade on each announcement. You find the ones that are the strongest for you, that look the best. If we look at this PMI flash data out of Germany, sometimes this has great directionality. If it's above forecast, 50/50. If it's below forecast, 67% of the time it drops. So this one I would be looking to see if the data comes in below forecast, I may be interested to sell. If it comes in above forecast, I may sit it out based on this data because it's 50/50 in that case. Okay, and so this is the way you'd go through, analyze each of these, and decide which announcements have strong movements for you. And so we could go down and look at the Canadian retail sales, and we'll look at year over year maybe. Above forecast, 60/40, okay. 60% of the time, if the retail sales come in above forecast, the Canadian strengthens and pulls the USD down. So if I see that data come in above forecast and I can catch a good entry point, I may be looking to sell after that announcement. If this comes in below forecast, 50/50. Okay, so then I wouldn't be looking to trade on the below forecast based on this data. So depending on how that comes in, be looking to trade one way or another. And again, maybe the month over month has more clear data than the year over year. So you always want to check both and see if this is above forecast. Look at that, 71% drop. So now we start to get a little more certain and we say, okay, I'll look at the retail sales month over month data. And if it comes in above forecast, it looks like I should sell. Not only did it drop 71% of the time, but the movements on average were much larger than the ones that went up. You see, this one barely wiggled up. There's only one that went up significantly. So not only is it 71% down and only 29% up, but one of the ones that went up almost didn't go up at all. So it's really almost, 5 down and only 1 up, with 1 staying flat. So that's an even better percentage when you look at it that way. So it looks like if this comes in above forecast, you have a significant advantage to sell on the USD Canadian. And if it comes in below forecast, it's the opposite result. 3 of them went up and really only 1 went down, with 1 staying flat. So 3 up significantly, 1 flat, and only 1 down if this comes in below forecast. So it's nice to see the opposite depending on how it comes in. When it comes in below forecast, it goes up the majority of the time. When it comes in above forecast, it goes down the vast majority of the time. So this one seems to be stronger than the year over year, stronger percent chance based on the past movements. And so this is probably the one I would focus on, the month over month retail sales, if I'm looking to trade at this time here. Okay, and we also could check the PPI data to see what effect those have and what type of certainty the PPI data creates. And then you decide which one, or maybe you want both of them to come in the same way in order to increase your certainty. Okay, any questions, comments on the economic calendar on how to use it? I'll pause for a moment. Okay, I don't see any questions popping up. So let's take a look maybe at some other moves. This is a gold trade from yesterday. It looks like it's climbing into a decent profit. And we also did a shorter term move on gold yesterday, which ended up closing nicely in profit. We based the gold move on the technical analysis signal from Trading Central, and then also looked at the fundamental news, understanding the announcements that were already occurred in the prior days and also what was coming today. And so we put together a plan that looked like it made sense both technically and fundamentally to buy in gold at that time. looks like it turned out quite well. One of them we protected with AvaProtect. That's the one that's still running. That was a longer-term move with 2 days protection. The reason for that was to get through today's announcements, projecting that if the data comes in worse than expected out of the U.S. In the coming day, that gold could even maybe be a bit more bullish. So we'll see, and I'll continue to let that one run. Maybe we can look at some more fundamental news to get a feel, again, as to what direction you might trade on different instruments. So the economic calendar strategy we just looked at, you need to wait for the announcements to come, and then you make your move based on the past data. That's what we call data-driven trading, okay, from those fundamental news announcements. Now we could look at maybe some headlines. The market buzz is a nice place to go. The market buzz is nice because it combines technical signals with fundamental news, okay, right in one location in the web trader. So first of all, you need to choose what instrument do you want to analyze. And so by default, it's on stocks. JP Morgan here is a smaller circle. If I can get to it, there it is, with only 58 mentions online that we found today. And so those 58 mentions create a much smaller circle than, for example, NVIDIA, which is a larger circle here, 389 mentions we've found online. That's in social media, articles, business websites, etc. Okay, so we could look and see, well, what's the latest on Microsoft or NVIDIA? I think I just saw a headline yesterday near the end of trading day that NVIDIA officially was the largest market cap company, passing Microsoft as their stock price went up further. So quite a past year and a half for NVIDIA, just skyrocketing in share value. And you keep looking and seeing week after week, this prediction is the same in terms of directionality. The percentages are slightly different each time I see it, but it's been up between 15 and 20% prediction for the price to rise. And again, it's predicting in the trend analysis a further 18% plus climb could occur moving forward with NVIDIA. And so, we can click and get the trend analysis. You can get the support and resistance levels. The signal here explains the technical indicators, the important price levels. So you can get a good idea of the technical side of things here. And basically, it's a buy signal. It's telling you the price may rise 18%. But then you should look into the fundamentals, obviously, to see, do the fundamentals align with that technical prediction, right? And here's the latest article we found only 10 minutes ago. It came out. NVIDIA's explosive growth masks AI disillusionment. So that's interesting. Sounds like the glow of NVIDIA is kind of blocking out maybe some other things that people are choosing to ignore about the AI industry. And maybe it's not all gleeful and positive like people feel about NVIDIA with their market share that they have on the chips that they're making for the AI industry. Maybe the other parts of the AI industry have some disillusionment. That sounds negative, by the way, that word. So if you wanted to know more about that, you click on the link. It loads a synopsis or summary of the article, and it also allows you to click a link to go to the website where it was found and read the entire article. Okay, NVIDIA's explosive growth masks AI disillusionment. To avoid a painful correction, tech companies must if I can get rid of these pop-ups, tech companies must, let's get out of this. Let me reload this page. Start managing expectations properly. And you can read the article to see exactly what are they talking about here, managing expectations and worried about a pullback of some kind. So read through the article, and that then can help you to decide what might you want to do with this prediction of NVIDIA to continue rising 18%. And if it's a headline that doesn't change your mind on that, or maybe supports buying on NVIDIA as you read the article, then great. Then maybe you act on that signal. If you read one of these articles and it tells you some bad news about NVIDIA that just came out, then maybe the trend came out, the trend prediction came out before the article, and the article maybe works against the signal. So that's why you want to go through, read a few articles, see what the main stories are most recently on whatever it is you're going to trade on, and then act on the signal if it makes sense. Okay. This next headline, Microsoft fought with NVIDIA over how its chips should be used. Okay. Could read the article, see if it's, a fight as they describe it, if it's something that really would affect NVIDIA or not. Sounds like probably not, but you could read the article and see. Okay. And we can do this for any instrument on our platform. It's not just stocks. We can go to cryptocurrencies and read what's the latest on Bitcoin or Ethereum or some of the lesser used coins that we offer. They're all listed here, okay? If cryptocurrencies are available to trade in your region. Currencies, you can look up the pairings. What's the latest news on commodities, on gold, on natural gas, etc. Okay, you'll get the same thing when you click on it. You get many times a trend analysis, not always. It's not always a signal on everything, but if there is, you'll have it. And you get the articles to read what's the latest news on topics related to this instrument. Okay, so a great place to find fundamental news. And a third place, before we end things, to find fundamental news is just above this discovery section, the news feed. So if I click the news feed, it comes in time-stamped with different newsfeed topics, and it includes the latest stuff from the economic calendar, the latest headlines. It puts it all together in a summary of what's going on related to whatever instrument is listed below. Okay, so based on this news up here, it suggested you might want to trade either on Bitcoin or GBP USD. Okay, based on this news here, it suggests you might want to trade on crude oil, okay, etc. So that's a big time saver because it summarizes a lot of fundamental news for you right in that news feed. Any questions, comments? And what we could do is take a look at maybe gold again. Let's see if there's still a signal on gold that as I explained, we acted on yesterday. This little symbol means there's a signal for that instrument. If you click on that, it loads, and we can see it's bouncing off of this orange line. This is the signal in the order window now. And this is the pivot line. You see it's labeled pivot. What that means is if it's above that line, it's a buy signal. If it drops below that line, it's a sell signal. It gives you the buy scenario and the sell scenario. The original scenario was the buy scenario. That's why it says that it's a buy signal up here. So it tried to break below the pivot here and went back up. And now it's bouncing up strongly off this support line, which is the pivot line. It's bouncing up strongly towards the suggested take profit levels here and here. And on my short-term move, we already hit the first take profit. That's the one that I showed. And the one that's still open, I put AvaProtect on, looking for a larger take profit up higher. So if you decided to buy on this signal, first of all, you could draw the lines on the chart, which I already did yesterday. The pivot line is here. The take profit suggested lines are up here. That's these green lines. Okay, this line is the pivot line here, and my stop loss was down here. Okay, 23.22 below this pivot down this way, so that it would have to break below the pivot and signal a sell before it would hit my stop loss on my buy. So I'm using these support and resistance levels to determine where my stop loss is below the pivot on my buy, where my take profit was on that first trade that already closed here. On this movement, it hit the take profit on that trade from yesterday. It's trying again and still a buy signal leading up to the announcements today and tomorrow. Okay, and so it looks like this is going to maybe try and challenge the take profit levels up here again. And so it looks like a solid signal once again. If we go and we decide to buy, you can set up a market move with your take profit up near the suggested take profit levels from the signal, or higher or lower, depending where you want to put your take profit. Your stop loss can be down below the pivot or somewhere more near if you don't want to put it that far. And if you wanted to protect like I did with AvaProtect, maybe in lieu of a stop loss, you just wait and see where this goes over the next day or two. I can protect by the hour or by the day. If I do one day's protection, that goes through tomorrow. If I do 2 days protection, that takes me through the weekend to Monday. I'm protected, and I can be really patient with this move, whether I'm buying or selling, whatever you decide to do. If you're going with the buy signal, you'd buy. And that would get you through today and tomorrow's announcements to see if those work in your favor to further weaken the USD and drive gold upward. Okay. If it continues to be worse than expected news out of the US like it has over the past couple weeks, you could see gold more easily climb against the US through now and Monday. So a couple days protection. How much do I want to pay for the protection all the way to Monday? I probably wouldn't want to pay $4,000. That's, over 5-6% of my balance. So you adjust the trade size to be the amount that you're willing to risk on a trade. So if I do half a lot, I'm paying less than 600. That's less than 1% of my balance, less than 600 for the protection. And that's for 50 ounces of gold. Gold could move 100 ounces in a short period of time. So you could easily make back 5,000 on a move like this with 50 ounces. If you had that kind of move between now and Monday, which easily could happen. So the profit potential is much larger than the cost of the protection. And now by using AvaProtect rather than a stop loss initially, now when the protection is nearing its end, I might want to add a stop loss at that point if the protection is ending, if I haven't closed maybe in profit already. But if this thing goes flying the wrong way when I open it with protection, I don't lose anything more. I'm only down the cost of the protection during the protected time period. Okay, so very nice feature, AvaProtect, to use. It helps you diversify your risk management strategy and also be more patient with waiting for that fundamental news to come in to really move it the direction you want without having to worry about spikes the wrong way, catching your stop loss in the short term when you're protecting for something like a couple days. Okay. And if you're looking at your take profit at higher numbers, by Monday we could probably be looking at 1 day candles and saying, wow, gold by Monday could move all the way up to something like this if it gets some momentum. Look how quickly it dropped in 1 day. It certainly by Monday could try to challenge a resistance level up higher. So if we're looking at like 23.77, 23.80 for a take profit, we're looking at over $2,100 profit potential and paying only $587 for protection. So if you're right 1 out of 3 times, you're doing okay. You'd pay $1,500 or $2,000 for 4 trades with that protection and make $2,100. So you're better than breaking even if you're right 1 out of 4 with this type of setup. Okay, and if you're right even 50% of the time, you have a nice return. And you're protected against any huge negative moves with the protection. Okay, so this helps calculate your risk management. My risk being the upfront payment of the protection upfront, and my profit potential being really unlimited. I don't have to program a take profit. Maybe it's going to go up further towards a high like this by Monday, and maybe you just leave without a take profit, or you put the take profit higher and you could manually close it if you wanted to close it at a lower spot at some point. So, if I wanted to put 2,400, now I'm looking at over 3,100 profit to get up to this area up here where it was just a couple weeks ago. Okay, so a lot you can do with the fundamental news coming to anticipate the potential for large movements on instruments like gold or S&P 500 or the FTSE, etc. And the currency pairings that you can use with the tool on the economic calendar. Okay, so a couple different strategy concepts here with the economic calendar using data-driven trading and with the market buzz and headlines to help with trading from news that's coming in by the minute, by the hour, all through the day. All right, everybody, thank you for joining. Good luck with your trading the rest of the week, and hopefully you can take advantage of some of these opportunities as they come up with the economic announcements and the market buzz headlines. All right, bye for now. Take care.